big question, of course, is you have oil rigs continuing to increase as OPEC production continues to come down. How does that resolve itself on the curve?
Right. I think the most important thing to think about is the oil companies are trying to make money and they have money to spend. So the reality is they look at the forward curve for signals for when to invest their capital, but they are a growth business and they're going to keep investing until they run out of money.
So when you look at a forward curve and you look at prices out in a year, they're around 50, 52. I'm trying to get a read on what level would stop that kind of shale production and oil rig increase.
Right. I think there's two things going on today. One is the oil companies think that they can make money at $50, so they're going to keep drilling at this curve. The other thing, which I know you're well aware of, there's been a lot of money invested in land, in particular in the Permian Basin. The number over the last 2 years is about $40 billion. And you can't spend $40 billion on an asset that doesn't produce cash flow and just let it sit there.
How long does that story play out for? Because 40 billion, yes, but maybe not 40 billion in the next 9 months, for example, if the curve stays around 50. Correct.
So the $40 billion was spent with the idea that it gave them an opportunity to spend more once they acquired it. So I think the most important thing to realize is that the next year is probably not going to change a lot of people's minds if we're in this range. So I think the drilling plans are out there, and people are going to continue to drill and develop those assets they've acquired.
So what's your base case for 2018 then? We don't have an exit strategy from OPEC, but at some point you're going to have Russia and Saudi Arabia are going to want to get back their market share, right? While shale is still producing potentially 10 million barrels of oil a day. What's your base case for 2018 for that?
Right, so we're long-term investors, and we really don't focus as much on what's going to happen in 2017 and 18. But our view on base case today is that OPEC's looking for stability. That's what they do. I think we're actually seeing that in the market. Oil's been relatively stable. It's one of the reasons we've been able to invest. And so as I look at 17 and 18, I think it's going to be relative stability unless we see some demand or supply shock.
And so but in terms of price, do we go below 40 or do we stay at the 45, 55 range?
I think as things sit today, we've got two factors working. One is the industry itself is a depleting resource. So the installed oil base is declining every day. So we've got to spend a lot of capital to continue to replace that production. So within a range, I think it's reasonable to assume we can stay where we are, but it's all going to depend on how quickly U.S. shale can increase. And then also, does OPEC cut more? They have a history of cutting a fair amount of production. We haven't talked about that much recently, but OPEC has been the stabilizing force over a long period of time, and they could do a lot more. Yeah,
1.2 billion barrels a day is like a drop in the bucket for them. Let's talk about you investing. So you're in the Eagle Ford, not in the Permian. Why are you making that choice?
Right. Well, we've talked a lot about investing and what people's plans are for 17 and 18. We are investing, and we expect to continue actively investing, but we're doing something very different with our capital. We're actually buying existing production. So what we see in the industry today is a dynamic in the United States and North America in particular, where companies are continuing to focus on growth, and that growth comes from buying land, in particular in the Permian, and then investing capital in drilling to bring more production online. To finance that, they're going to the capital markets, which we've seen have been pretty receptive in 15 and 16. It's actually slowed down significantly this year. And then secondly, they sell assets. So they sell assets that they feel are lower growth in order to invest in assets that are higher growth. And that's really good for us. We like acquiring assets that are being sold today that have a lot of current production. It gives us a really long-term approach to the business.